Hey there, this is Tim, and this is my updated video on Al Brooks and using his price action methodology to hopefully make money. Now, so you want to go ahead and make money with Al Brooks. First, I want to give the usual disclaimers. If you're thinking about trading, trading involves substantial risk of loss. It's very, very likely that you're going to go ahead and lose money if you start to trade. Second of all, this video it has no connection to Al. It's just me on my own opinion. I've never met Al. I'm not related to him. I don't have anything to do with his business. I'm just a fan of him, and I'm sure Al is totally unaware that I exist. All right, it's just me and me alone. I've made a couple of other videos and on Al and Al Brooks methodology, and I wanted to follow up. I've gotten some questions, and I wanted to complete a couple of other thoughts from those videos. First, some people ask me, why do I follow Al Brooks as opposed to somebody else? And first of all, whenever I hear people selling a system on how to make money, and whether that's a trading system or say like in real estate or gold or even baseball cards, there's always this kind of inherent conflict of interest. And I always wonder, if your system is so great, why aren't you making a zillion dollars implementing that system instead of selling the system? And Al is actually pretty crappy at promoting himself and his material. I kind of really get the picture that Al, he just rather be trading and studying charts, and that's what makes him happy. And he's only providing this material because people keep on insisting to reach into his knowledge. But otherwise, he'd just be happy in his little shell trading at home. And to me, that's what makes him more authentic. And I really get the strong impression that Al, he makes his money from his trading, not from selling his system. That is, I'm sure Al, he wants to be fairly compensated for his books and his training materials because he has put a lot of work into them. But I can tell the guy, he's not making his mortgage payment this month from selling the system. He's actually making his money from trading. So what Al has done with his price action methodology is he has identified the major components of price action and put them together. Let me show you. Let's go over here. So here's Al's. He's done 4 books, but these 3 are the trilogy. And in these books, 3 books, he has 770,000 words. I mean, that's over 3/4 of a million words. And this is an exaggeration. You could read this for 5 years and still not really get it. All right. And now is at least the first to tackle this on big time, which is pretty good. Then he shows you the components of price action and how they work. So let me give you a quick example here. So this is from one of his training videos, and this is the usual course. Is he explains a price action feature. This is major trend reversal top. So he goes over the theory, and then he shows you how that theory is implemented. So he shows you the chart, and he shows you how from in here how major trend reversal top is working. All right, pretty cool, right? Well, in reality, that gets you about 60% of the way there. And what makes this so difficult is you're unaware that the other 40% is missing. And not only you're unaware, you don't even know what it is. So what you have to do is you have to do a lot of exploration, a lot of fumbling around, a lot of study to fill in that other 40%. Now, I'm not going to beat up Al too much for not providing the other 40% because he's already stepped up to the plate big time by putting together his books and his videos. I can tell he's spent tens of thousands of hours of work. And for him not to want to do the next phase, yeah, I think that's for somebody else to do. So, okay, what's missing? So after I see Al go through an implementation of the setup and explain the context, I just don't need to see it once. I mean, I need to see it again and again and again and again for me to start to get it. He can't go through it just once. He's got to go through it multiple times. And then after he goes through it, I need to go through it. I wish that there are examples where I could look at the chart and you say, okay, as you understand this setup, what should you do? Is this a good should you implement the setup on this chart, or should you go ahead and pause and not do it? Is this setup appropriate at this time? Also, the setups are kind of explained in a sequential order, but they don't build on top of one another. So, like as an example, if I were learning a foreign language, say Japanese, what I would do is I learn 10 words. Great. Okay, I learn another 10, and the new 10 incorporate the previous 10 words, so now I'm up to 20 words. Then I learn another 10 words, and those 10 words incorporate the previous 20, so now I'm up to 30 words. So the setups build on top of one another. And in OWL's training, the setups, they're more of a sequential nature, and they're not necessarily building on top of one another. So how you balance all the setups together can be really at least confusing. Let me show you an example here. So, here's the Wikipedia page, all right, on price action. Okay, and they're listing some of the setups here from price action. And mind you, this is just a minor list of them. And you can see, there's probably like about 2 dozen here, and that's just a few of them, all right? And so you're trading, and let's see, I see this point here, and as I said, the price action, well, now I can start to think of like 3 reasons why the trend may quit and go down, and 5 reasons why the trend may continue and go up. I mean, what should I do here? Should I buy it or sell at this particular point? And given when you go through all of Al Brooks' material, after you know it all, it's not explained as well as how to integrate it all together and balance it so you can come up with one final decision. Simply, should you buy or sell at a particular point? And what's really needed is courseware. Now, back in the day, I used to play blackjack professionally, and in my circles, we used to joke among ourselves. If you really want to make money with blackjack, what you need to do is write a book on how to make money playing blackjack. And I think the real way to make money with price action methodology is, instead of trading, setting up a course to perform this missing part of it. And this isn't much of an exaggeration. You would make more than 99% of price action traders if you filled this market need and developed a courseware to help teach price action trading. The second part is Al doesn't reveal his trades. And this is a major bummer, because I know, at least for me, I would learn so much if I could see how the master trades. Now, Al says it's due to SEC rules that if he revealed his trades, it would subject him to a new set of SEC rules, which would add a lot of complexity to his operation. Now, this is just my speculation, but I don't think that's the case. I think that's a bit of a convenient excuse. Rather, I think here's what's going on behind the scenes, is that first, the context is lost. Now, I've heard Al on his data forum, he may explain one of his trades or two. And it does take some explanation to understand his trade. And if you're just to show the chart of his trades, that context would be lost, and it could be easy for somebody to go awry if they just saw the trades themselves without getting an explanation of those trades. And also, I think it prevents pissing contests. That it would be easy for somebody, like I wouldn't doubt, for instance, Al has a bad week, and the guy loses money. Now, that's just my speculation, but I wouldn't be at all surprised by that. And I think somebody could just, if they wanted to harp on Al, could just pull out that week and go, well, geez, if you're so great, why'd you have this bummer week? And I think it prevents someone from taking his work out of context, where Al has to then spend a lot of his time defending himself, and especially when it requires a nuanced explanation just against the soundbite, that can be very difficult. Also, I think it makes life simpler for him, a lot less work. So if we reveal his trades, the guy now all of a sudden is going to fill a new vector of questions. Why'd you trade this? Why'd you trade this? Why'd you trade this? Why'd you do this? And I'm sure the guy, he's already busy, swamped. He's crazy busy. And for him to take on a whole new set of questions, just, I imagine, something he's not looking forward to. And finally, I don't think the guy has to care. Now, I don't mean that he's uncaring or unempathetic, but what he does is just kind of puts his material out there, and he says, hey, I hope this is helpful. I hope it's useful. I hope it makes you smarter, and I hope it improves your trading. But if not, well, okay, go on to something else. Like I say, he's not dependent upon selling the system to make his money. So, like I say, I don't think it's unempathetic, but just I don't think he has to take this on. So, what should you do given this? Well, I'm going to go over a couple of routes. But let's say you decide you want to become a price action trader yourself. Well, I'm just going to go ahead and point out a couple of points on this. The first one is the cost. I would be prepared. You got to have at least, I'd say, 10,000 to 25,000 in your portfolio to start off with, and that's fun money for you, money you can afford to lose. Don't bet on getting it back. Second, be prepared for your changes in life. Kind of my analogy is, say like if you get a goldfish, and you go ahead, you put it on your dresser, you feed it once a day, all right, and you look at it, not that bad, not that big of a deal. But let's say like you get a golden lab. Well, okay, now you've made a commitment. You have to go ahead, feed it, walk it, interact with it, all right, it kind of becomes a member of your family. You're taking on the change to your lifestyle. Well, with price action trading, it's going to be the same thing. You're just, this isn't something you're going to learn in the weekend or with a couple hundred hours of study. Man, you have to kind of change your bit of your lifestyle to study and study and study and practice and practice and practice. And so I'd be thinking, like for instance, if I were a father with a young family, I'd be going, well, geez, this is right for me. Versus, let's say, if I retired at say 65 and I had an extra 25,000 I just wanted to play with, well, okay, that's cool. Also, get used to thinking probabilistically, and this is a big mind warp for me because I came out of an engineering field where I'm used to working in more right and wrong answers. So, like for instance, I'd be designing a beam, and I knew given the length of the beam, if it would be able to carry a load or not. With trading, you're usually dealing in the band of 40 to 60% probability. So you could have a context and a setup that works one day, and then next week you go ahead and you trade the same context and setup, and it fails. And you're beating yourself up. Geez, what happened? This worked before. What did I miss? What went wrong? Where did I go awry? And it's nothing you did. It's just the nature of the beast. Probably my strongest recommendation is you got to join the community. You can go to Al Brooks' website and have a forum, and you can find others on there that you can start a conversation with. But I would definitely get into community of people who have the exact same motivation as you, the same goals, so you can all learn together. And finally, be aware of simulated trading versus real trading. So I've seen this before where people get in the price action, so they want to practice it, so they go ahead and they start trading on paper. And on paper, they're making bucks. And then they go, well, woohoo, time to trade some real money. And they go ahead and put the real money, and no surprise, they get wiped out. And that's because they don't appreciate the psychology difference between simulated trading and real trading. So just be aware, you make money on paper, that doesn't mean you're going to make it in real life. Now, what I say is get real. So you're about to go down the path that a lot of other people have went down and gotten burned. Now, if I were to think of some who are the smartest people who ever existed, this might be one of them. This is Isaac Newton here, all right? And Isaac Newton himself, he got burned trading stocks. He got caught up in the South Sea bubble and lost a good part of his fortune. And he was quoted as saying, I can figure out the motion of the planets, but not the madness of men. And this is a bit of a sarcastic comparison, but do you think you're smarter than Isaac Newton? Well, if Isaac Newton couldn't make it trading stocks, what are the chances that you're going to make it trading stocks? I mean, that's a pretty stark comparison. Here's a bit of an updated version of it, but I was just reading the book When Geniuses Fail. It was a bit of the same plot line. These immensely smart men who made mounds of money for a while on Wall Street, and then something flipped, and they started losing big time. I mean, in one day they lost over $1 billion. Can you imagine taking that hit? Boy, I'd definitely be crying. Now, I don't want to be too stark on that because in my own trading group, we have some members, and I don't know the amount that they're risking, but just I pick up the inference that overall, on average, they are making $5,000 to $10,000 a day in their trades. So, it is possible. So let's say I scared you out of price action trading. So what else can you do? Well, a second way to go is identify other smart people. So there are two good things about this. No matter how much you work and how much you study, there's always going to be somebody smarter than you. So instead of working on getting smart yourself, why don't you just work on identifying someone who's smarter than you and do what they do? And the good thing is that smarter person, they do all the work and you just follow their signals. Now, here's a website, and there's a couple different websites like this, all right? But these are traders who, for a monthly fee, sell their signals, and you can follow their exact same portfolio, all right? And, of course, you have some good ones. Well, look at this one. This guy in 6 months made 234%. Geez, if I were a price action trader and I made a tenth of this, I'd be happy. But it's a lot simpler to follow this guy, and I'm not endorsing him, or somebody like him, than to take on price action trading myself. This is a bit of a segue, but on this website, I was looking up traders who were price action traders, and I saw just a graveyard of them. I mean, there are tons of people just like this who price action traded for a couple of months, were down the whole time, and then quit. And these are people who probably thought just like you. They took on the education, they took on the work, all right, studied, but yet when it came down to implementation, they failed. All right, I shouldn't say they failed, but they didn't make money. Here's another example. I actually know the guy who does this one. All right. And overall, and this guy, he's smart. I mean, this isn't an exaggeration. He studied price action trading for at least 4 years, and he's down. All right. And here are his trades, and you can see the majority of his trades, he went into the red. And get this, he had one big winner at the end. Well, that was because he bought and held when the S&P had a bull month. So when he's price action trading, he was losing. When he bought and held the S&P 500, then he won big time. And I was on this website looking for what I thought would be the most active or successful price action trader. Seems to be this guy. So overall, he's positive, but you can see it's a bit of a bumpy ride. He's had a 60% drawdown at one point, and less than half his trades are profitable. So you can see here the guy, he rocked it for the first year, but then years 2 and 3, he took hits. All right, year 4, he's still up. Now, can you imagine you're trading during 2015 and 2016 and you come out in the negative? I mean, after this, I'd be ready to try something new. And it was a roller coaster ride. I mean, 1 month, he made 55%. Great for him. But in his biggest loss, he lost 30%. Now, if it was for me, I'd be crying that if my portfolio took a 30% hit in 1 month. Man, that's just not pleasant. So you can see this price action trading, the heart attack index is definitely way up there. Not simple. Oh, that's what I was talking about. Okay, so the third one, good old index funds. Now, I was just reading this article on Warren Buffett. So a decade ago, Warren Buffett, he made a bet to any hedge fund manager, and this is real money. He made $1 million bet, and he said the S&P 500 will outperform your hedge fund over a decade. And out of all the hedge funds out there, there's only one hedge fund out of the thousands who are willing to take him up on that bet. And that by itself should say something. So Warren Buffett put his $1 million into the S&P 500. The hedge fund manager, he invested in 5 different hedge funds. And each of those 5 likewise invested in another 5. So his hedge fund actually composed of 25 different funds in themselves. Okay. So after the decade, it says right here, the hedge fund earned only $220,000 in that million, while the S&P 500 earned $854,000. So that's pretty stark. Okay. So the one hedge fund pro couldn't beat the S&P 500 by a long shot. So what are the chances that you or anybody else is likewise going to do the same? Here's another guy I was just reading about. This is kind of interesting. So, Victor Hagney. So he ran LTCM during the 90s. Brilliant guy. He's a quant guy. And in the 90s, his fund was making 40%, and he did it for I think 8 or 9 years. And can you imagine consistently returning 40% every year until about 1998, where the thing just blew up. All right. He actually, in one day, his fund dropped over $1 billion in value. In fact, when his hedge fund went under, it had to be bailed out by the federal government because it was deemed a threat to the financial system if it totally tanked. Okay, so really, really interesting story. But the kicker is this guy is back. And he's not investing in his old ways. Rather, what this guy is doing now is he's investing in index funds. All right, this is his new philosophy. So this is one of the smartest guys. He's definitely a great trader. Did it for a while, and he said, you know what? Index funds are the way to go. So if you're thinking about trading, well, think about these great traders who are actually saying that index funds are the way to consistently make money overall. This is just kind of an appendix I put in there. This could be different ways, getting a side job. Now, in the end, what you're really doing is you're exchanging your time for economic output, or what you're doing is you're trading. So you're learning how to trade, and that's your usage of time. Well, if you're going to put your time forward, there are lots of different things that you can do. So actually, I have this friend of a friend, young lady, and when she was in college, what she'd do is she'd go to thrift stores and she learned what the popular women brands were. And so she'd buy those brands at way cheap prices and put them on eBay. And she was making between $1,000, like $1,500 a month during her college years, buying brand women's clothes and some purses and reselling it on eBay. All right, and good for her. So when she got her job, she continued her side gig as buying and selling women's brand clothes on eBay, and continued to make that little money. So all she did with her eBay money is she put it into an index fund. Now I know she's been out of a job for like about 5 years. I think she's about 28 now. Okay, and so with the money she's made, she put it in an index fund. It's over 2 times her annual salary right now. So wouldn't you like to make over 2 times your annual salary, all right, and have it in the fund that's going to grow? And she didn't do it by being a brilliant trader. Rather, she did it the good old-fashioned way by working. All right. This is a little bit of a segue, but I thought this was kind of interesting. Of Winco. So, at least in my area, there's this grocery store called the Winco. And Winco is actually employee-owned. So if you've been with Winco for over 5 years as an employee, you're allowed to buy their stock. And you get a slight discount on it. But because it's employee-owned, I mean, when I go in there and shop, it's not uncommon. I'm talking with employees who have been there for 15 to 20 years. So I was just reading this article where right now Winco has over 400 employees with $1 million portfolio of Winco stock. Now, of course, it's not good to be invested all in one stock, but think of this. This is a cashier who's been working for 20 to 25 years at $15 an hour, stocking away a little money every paycheck into the stock, and the stock is growing, and she's retiring with over $1 million just in that stock by itself. And think of how many higher paid employees are not going to retire with $1 million portfolios. Yet here these people, very modest means, just chugging away consistently at it, and over time, they got the big bucks. And I thought that was pretty interesting. So my conclusions. Remember, use Al Brooks. Great guy, very smart. But be prepared. He's only going to get you halfway there. And the other half, it's going to be a slog. Al, if you're listening to this, man, show us your trades so that we can learn. You would make my life so much simpler, and you would lessen my stumbling around, all the bumps I've taken. I'm not there to beat you up, man, but I want to understand how you're trading so I can have access to better mind than me. And finally, as I've shown, if you're thinking about price action trading, God, there's a lot of simpler ways. And all those ways simpler, they're probably going to be more successful, and they're probably going to make you more money in the end. All right? For price action trading, it's fun, but it can be a slog. Anyway, I hope this helps you make a better decision. Cheers.